Welcome to the Personal Finance Channel. If you're looking to learn how to invest smarter and build long-term wealth, you've come to the right place. Today, we're diving into 5 key points you should always consider before buying a stock, inspired by the timeless investing principles of Warren Buffett. Warren Buffett is one of the most successful investors in history. His approach to investing is simple yet highly effective, focusing on long-term value and solid fundamentals. In this video, we'll explore 5 key principles inspired by Buffett's philosophy that you should always consider before buying a stock, along with real-world examples of U.S. companies to illustrate these points. Point 1. Understand the business. Invest in businesses you understand. Buffett emphasizes that you should only buy stocks of companies whose products or services you can explain clearly. For example, take Coca-Cola. It's a simple business. They sell beverages like sodas, water, and energy drinks. Coca-Cola has been around for over 130 years, and its business model is easy to grasp, selling a product that people use daily. If you don't understand how a business makes money or its industry dynamics, it's hard to predict its future performance. Always ask yourself, do I know this company's business inside and out? If not, it's probably best to look elsewhere. Point 2. Look for an economic moat. Seek companies with a strong economic moat. An economic moat refers to a business's ability to maintain a competitive advantage over its peers. A great example is Apple. Apple's brand loyalty, ecosystem of interconnected products, and its proprietary technology like the iPhone and MacBook create a powerful moat. Even if competitors sell similar products, Apple's unique ecosystem keeps its customers coming back. When investing, look for companies with similar moats, ones that can protect their market position for years to come. Point 3. Assess the quality of management. Evaluate the quality of management. According to Buffett, great leaders make great companies. One standout example is Amazon under Jeff Bezos. Bezos focused relentlessly on customer satisfaction, long-term growth, and innovation, turning Amazon into a trillion-dollar company. When researching management, look at their track record, vision, and ability to adapt to challenges. Read annual letters to shareholders or watch interviews with the leadership team. Strong management can make or break a company's future. Point 4. Determine intrinsic value. Calculate the intrinsic value of the stock. Intrinsic value is the true worth of a company based on its financials, such as cash flow, earnings, and growth potential. For example, let's look at Berkshire Hathaway, Buffett's own company. Investors assess its value by analyzing its diversified portfolio, steady cash flows from businesses like Geico, and its long-term growth strategy. You don't have to be a financial expert to start. Tools like discounted cash flow models or valuation metrics like price-to-earnings ratio can help. Always look for a stock that's trading below its intrinsic value to ensure a margin of safety. Point 5. Think long-term. Finally, take a long-term perspective. Buffett famously said, "Our favorite holding period is forever." For example, consider Microsoft. Investors who bought Microsoft shares 10 or 20 years ago and held on to them have seen extraordinary returns. This success comes from the company's ability to innovate and grow over the decades with products like Windows, Azure, and Office. Instead of focusing on short-term price movements, look for companies with staying power that you believe will grow steadily over the next 10, 20, or even 50 years. Compounding rewards patient investors. In summary, when buying a stock, focus on understanding the business, identifying its economic moat, evaluating management, determining its intrinsic value, and thinking long-term. Real-world examples like Coca-Cola, Apple, Amazon, Berkshire Hathaway, and Microsoft show how these principles work in practice. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more investing tips. Thanks for watching, and happy investing.